Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 29th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that all impacts the markets with my market analysis. I do the same thing in these daily market commentaries, but on top of that, I talk about option strategies and how we should go through a process before implementing any other option strategy according to the assumptions we come up with from the economic, geopolitical, and that market analysis. So without further ado, let's get on with the economic data, see how that's impacting the overall markets today, and then see if we have any option strategies we can talk about. All right, first off, let's talk about across the pond. Really not a whole lot to see there, but here in the United States, we did get our building permits coming in, housing starts, pending home sales is what it was, coming in quite nicely at 44.3%, expected to be 18.9%, so really following through with these housing market and the strength of what's going on in that housing market is really pretty surprising, considering that we've been talking about in the past for several months that we could be going into the Great Depression. Well, the housing numbers really aren't showing that. So really good there on the pending home sales. Nice to see there. It is a short week. It's going to be pretty light on volume, I have to believe. Coming out of over the weekend, we've seen some strength, starting out in negative territory with the overall equities and now starting to push into positive territory with that good economic data point and some better than expected news coming out of the coronavirus. Yes, we did see that Texas is shutting down, kind of backing up on their opening up of the economies, but for the most part, there's a few states that are seeing some spikes, Florida, Arizona, and Texas, but the rest of like the East Coast that was really hardest hit is starting to lighten up a little bit there. All right, so let's talk about crude oil. It is moving higher today, testing that 40 handle and lining up just above that 50 Fibonacci and the 9-day moving average. So we did settle below that 9-day moving average, which is starting to signal short-term weakness, but today making a move back above that. So it looks like the bulls are really trying to defend this area and not allowing it to go down to those mid to lower 30s, which is what I was kind of expecting to see. We're still seeing higher highs and higher lows, so that could be a trend that we're going to have to keep an eye on for crude oil moving higher. Gold coming in today up about $2.50, but well off of the highs that we were seeing. That was earlier this morning when we were seeing the equities in negative territory. Across the board, we saw equities in negative territory, and now we're starting to see those guys push back into positive territory. Bonds pretty much unchanged for the most part. There is a lot of hubbub about the Fed coming in and buying bonds this week, so we could start to see this start to migrate back towards that 180 handle, just slightly outside of the 179, so just about a point to go there. VIX in negative by about a point and a third. That's because we are seeing these equities near the highs right now with the Dow Jones up 300 points. You can see earlier today we were in negative territory. Now that was right off the open of the overall markets. We sold off a little bit, but overnight we've seen some really good strength. As a matter of fact, overnight inventory was probably net long, no attempts to flush those out. So that is even more bullish. You've heard me talk about this time and time again. The day session likes to print that full range, kind of flush out some of those weaker hands overnight. Well, that wasn't the case today, which leads you to believe that there is some bullishness behind this move. Then we move over to the NASDAQ. Again, near the highs of the day, up 35 points, 9,900 right now, back below 9,900. That is going to be more of a psychological level. We don't have any Fibonacci's lining up against that. It's just going to be something that is a headline number for the most part, but you can see, again, opening up overnight, pretty low, as you can see, flushed down, but coming into today, just some overall strength. Again, E-mini S&Ps open up right at the point of control. One would think that maybe we would have kind of settled down in and around that area, but it was just a blast to the upside that we'll see here. As you can see, overnight opened up and pretty much got very long overnight inventory. Maybe right before the open, they got flushed out, you could say. This candle, it really isn't showing up in the NASDAQ and the E-mini or in the Dow Jones for the futures. But again, overnight inventory long and not really a day session trying to flush those guys out, which is pretty bullish there. So let's talk about a couple of things that I've done with my portfolio. All I've really done is taken off some of these trades that I put on for directional assumptions. I haven't added anything to my portfolio. Been really paring back on some of this stuff, especially it being a holiday week, and I do expect it to be a little bit lighter than normal. Caterpillar. This is a perfect example as to why you need to follow the guidelines I set forth in all of these webinars in order to pick out the correct option strategy for any given assumption, right? Well, with this being said, if you remember in Caterpillar, back on the 16th of this month, I saw this doji here. Let me try and line this up nicely there. On the 16th, this is where we started seeing a lot of talk about government infrastructure spending. Now, I picked Caterpillar as opposed to Deere because Deere, yeah, they do some infrastructure, but they are more into logging and agricultural type scenarios, whereas the Caterpillar could really be used in a lot of this infrastructure, building roads and things of that nature. So I was playing this to the upside. Bullish market assumption based upon the fact that there is going to be demand for these big earth-moving equipment and building equipment. Well, that being said, I got in here and decided to go into the July, sold the 105 puts in there for $1.18. Well, what happened? Selling puts is a bullish market assumption. You want that market to move up and away and then have theta and delta all eat away at that, right? Well, yes and no. We also talk about volatility and how that affects the overall premiums. That sometimes is more of a catalyst to increase our probabilities of success. And that was the case here. We saw high volatility spiking in here. I saw that little spike going on well away from the earnings, so it wasn't associated to that, so we could take advantage of it. We wouldn't expect that to hold on in here. And we went into the July to increase that thief in the night that comes and steals our premium. We want to allow that, right? If I'm selling something, I want him to nibble away at those premiums, which is what we're doing here. But mostly what we saw is a market move against me. My bullish assumption was completely wrong, but by building this strategy out according to the guidelines that I set forth in this, we have high volatility. We're trying to take advantage of the duration and how that impacts our overall premiums. Well, you can see the market from when I started putting this trade on was trading around 130, and the market really sold off quite dramatically. Well, in that time, I was actually making money because of this volatility coming out of the premiums from when I first put it on. As a matter of fact, we could say it came out about 8 percentage points, which is pretty massive when we're talking about a move like this happening in Caterpillar. So, for instance, the volatility coefficient, just stripping out everything else, getting rid of like theta and all of that stuff, what we're talking about here is the fact that if I had 9 percentage points coming out of that, that basically took 50 cents almost out of my premiums just for Vega, all right? And that was a major impact in this pricing. Actually, it was probably closer to maybe 40 cents coming out of my premiums there. But when we talk about what happened with that trade, right, 40 cents coming out of it, if I sold it at $1.18, I'm pretty close to 50% of my max profit just with that theta coming out also. That was a marginal aspect of it. But the Vega coming out, that premium coming out from the volatility coefficient dropping, that's what really saved me. And it counteracted almost completely, if not more, the directional move that was against me on this trade. Because we think if I'm selling put and the markets go down, those premiums should start increasing. Well, it was offset completely and trumped by the getting in at the right time in the correct environment, all right? So I was able to buy those back for 55 cents today. Not quite the best pricing of the day, but it was pretty good and very happy to get out of this. Like I said, we're getting out of this for 50% of max profit. That's just slightly better than what we talk about there, but right in line with my rules. So today, a little bit of a bounce, you know, despite the fact that it's still not out of that downtrend, was able to get out of that for a nice profit, being directionally wrong. Now, how often can you say that? I was completely wrong on my directional assumption, but I still made money on this trade. And that's why we build them out the way we do and talk about all of these guidelines in my daily market or in my webinars. So check those out at Pro Trader Strategies. All right, finally, we got LYFT. Now, LYFT is another one that I played to the downside. This one I actually got right. And it was a good thing because why? We had low volatility, and I was expecting volatility to maybe increase as the market started selling off in here. Directional move helped me more so than anything else. We did get a bit of a volatility spike coming into this market, but not really a whole lot to speak about. You can see here, I got in on the 19th here, and I went into the August trying to limit that thief in the night to come and steal my premiums because I felt that volatility was low and I wanted to buy some volatility, maybe get an increase there, and went into the August, bought the 35 puts in there for $3.50. Well, I'm looking at about a 50% increase or coming down and hitting my strike location. Well, we got that happening, blew through that a little bit, so I was able to milk that out a little bit longer over the weekend, and I was able to get out for $5.10. So right in line with those rules we talk about when you're buying an option, how we set that up, the right environment, all of those things being equal, worked out in my favor, being the one with a directional assumption that was correct. So we got two counter opposing theories going on here. One was I wanted to take applied volatility and exploit that in my favor. I was directionally wrong, and that volatility coming out helped me quite a bit. Well, in this one, I got in low volatility environment, and volatility didn't really go anywhere, so it didn't affect my premiums as much, but we got the directional assumption right, and that helped us. Limited that thief in the night in this trade, exploited him in the Caterpillar trade. So that's how we're trying to set these strategies up. Yes, they seem like very simple strategies, right? We go in and we sell a call or we sell a put, whatever. In this case, we sold the put, we're directionally wrong and still made money. In this case here with LYFT, I bought a put, was directionally right, but limited that theta component, yes, and I limited the volatility coefficient by getting into a scenario where it was relatively low already and maybe expected that to move higher. I didn't get the move higher in volatility, but the directional move and volatility remained constant. So all of those things being equal, that's why we set up these webinars. This one right now that we're doing, this course is on the roadmap to implementing option strategies. So when we come up with a scenario like this, I had two bearish assumptions two different assumptions, but setting those up according to these rules allowed both of those to be profitable, despite the fact that one I was completely wrong on the directional move and the other one I was right. But I also increased my probabilities of success by building these strategies out appropriately. All right, so that's about it. That's all I've done today. I haven't taken anything else off. I was looking to cover some of my MasterCard on the covered calls. Remember, I'm long a little bit of MasterCard, and I have a covered call strategy on that. So I was looking to get out of that, but still holding on to it at this point. All right, so light week, but we are still doing a webinar on Thursday. Check it out. It's the roadmap to building an option strategy. It's a really great course. You guys should take advantage of that. So sign up for it. The more the merrier. We answer all your questions, make sure that everybody's clear of concept and moving forward. All right. So if you can't take that, take it easy.